there are plenty of Americans who are considered affluent, but they're not rich enough for Goldman Sachs or Northern Trust. Those are the people Bill Harris is going after. Bill used to be the CEO at both PayPal and Intuit. His newest venture, Personal Capital, a website for those who need sophisticated financial services. Bill, John is here for this conversation, and one of the reasons is, as you just told us moments ago, it doesn't really have anything to do with your website, but you grew up across the street from Reed Hastings at Netflix.
In Belmont, Massachusetts. We grew up immediately across the street, and in high school, he was the cool kid.
He was the cool kid. Well, he's got a cool company going for himself now.
Very cool
Is
company.
this in character with Reed, the sort of the belated apology? Is he a supremely kind of confident guy who has trouble acknowledging his own mistakes?
No, he's a supremely confident guy, but he is very realistic, and he's done it again and again, not only with Netflix but with previous launches as well.
All right, we need to talk about your new company, Personal Capital. Is the president's plan for the wealthy going to, and we talked about it all morning long, making millionaires pay more money in tax? Is it going to spell any trouble for the market you're targeting?
Well, for the market we're targeting, yes. But for people who are using our service, we've specifically designed a service that has active tax optimization that can end up saving you 50 basis points in net after-tax return because we understand how the taxes work and manage your investments in order to take advantage of all the opportunities.
You know, you sit here with a story that people understand on Wall Street and in Silicon Valley because you went out and you raised a lot of money to get this business going. And I'm curious to know if you feel pretty good about the fact that you've got a lot of that money now as opposed to those companies who might be trying to target them or tap the market right now, and it's getting a little tougher.
Oh, absolutely. I feel great. We've raised $27 million, which is a large amount of money for a Silicon Valley startup. It's necessary because we're doing a very complex bit of work building a financial institution rather than just an internet startup. You know, in terms of the market volatility, is this a good time for us to be launching and trying to get customers right now? Absolutely. I wouldn't wish these markets on anyone, but given that it's what we've got, I think a large number of people with substantial assets need financial advice.
Bill, why does this need to be an internet business? I mean, I can see, right, the sense of not having a lot of bricks and mortar, and the internet is a good way to reach people, but lots of companies do that. What is it that appealed to your backers? Why were they willing to give you $27 million?
If you look at all of the industries that are going to be revolutionized by the internet or by connectivity, I would argue that the two most fundamentally changed will be media and finance, because you can do everything, both directions, electronically. I mean, why should you not be able to do everything, anything related to your money instantly with a couple clicks on your phone? And it doesn't happen today. I think over the past decade and over the next decade, we're seeing a fundamental sea change in consumer-based financial services going to internet and technology-based delivery.
We wish you luck.
Thank you.